Crown Resorts is found to be not fit to run a casino, but it keeps its licence to operate. National Australia Bank announces another big share buyback in a boost for bank investors, and the list of the richest Australians shows that the new money is in tech. It's Friday, the 25th of March, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
And Sean, after the show, you are speaking to John Stensholt, the compiler of the Australians list of the richest 250 people in the country. It's a great chat, but a bit more on that later on. First, Sean, we need to talk about casinos. Yesterday, we were talking about the Star Casino and the problems that have been emerging out of the inquiry into that group. Today, we're talking about Crown Casino, in particular the casino in Perth, which will be able to continue operating, but it's going to face heavy oversight for 2 years and tougher penalties for breaches of the law in the future because the WA Royal Commission has found it was unfit to operate the business.
Yes, Michael, the Western Australian Royal Commission found that Crown Perth money laundered, failed to have appropriate anti-money laundering measures in place, permitted junkets with criminal links to operate in the casino, and failed to be open and accountable in communications with authorities. The Royal Commission's final report was tabled yesterday, and it recommended that the government appoint an independent monitor to oversee Crown's operations. But unlike the recommendation from the Victorian Royal Commission into Crown, the WA overseer's role is to help the casino group on its path to remediation. In Victoria, the overseer will get a much bigger say in how the company actually operates. There will be greater powers over Crown for the relevant government minister in Western Australia. Though the report conceded that things at Crown had improved, shareholders were relieved that Crown can still operate in Perth, and the group's share price jumped to 0.5% yesterday to finish at $12.54.
Sean, what's this all mean, though, for the $13.10 a share bid by private equity group Blackstone? The Crown board had agreed to that. Does this affect any of that?
Well, it means it's still on the table. I think if they weren't operating in Perth, the price would have fallen somewhat and perhaps the bid would have been pulled. So it's still on the table. The final outcome, of course, depends on what James Packer does with his 37% stake in Crown. We still don't know about that. Now, the 1,000-page Royal Commission report has been passed on to relevant law enforcement agencies, including the State's Corruption and Crime Commission, WA Police, AUSTRAC and ASIC. Michael, it kind of ends the legal saga for Crown, but not the corporate saga. Inquiries in New South Wales, Victoria and Western Australia, the three states where it operates, have all found the group not fit to hold a gaming licence. Yet the casinos in Melbourne and Perth are still operating, and the one in Sydney is likely to open in coming months. Pretty remarkable, I think.
It is pretty extraordinary. And you wouldn't think that so much drama could come out of just one company and now one sector, really, when you factor in everything that we've been hearing about this week with the Star as well.
Yeah, I think so. I mean, what the West Australian Premier Mark McGowan said yesterday was that there are about 5,000 jobs created by the casino. The same argument was used in Victoria. And certainly, I don't really have a strong view on gaming one way or another. Many people do. Certainly, it is a legitimate business, or it's supposed to be a legitimate business. It employs many, many people. It creates in Perth and in Melbourne, certainly those communities around that thrive as a result of it. So there are plenty of goods coming out of Crown Resorts. But wow, some of the findings are quite incredible.
Yeah. Now, you mentioned that the Crown share price jumped 0.5% yesterday. How did the rest of the local share market perform?
Well, it was up again. The S&P ASX 200 has risen every day this week, and it's back to where it started the year. It closed up 0.1% yesterday to 7,387 points. Utilities and energy stocks did well, while healthcare and technology stocks underperformed. Iron ore prices rose, and that helped the big miners, led by BHP, which was up more than 2%. Rio Tinto was up 2.5%. The banks were mixed. The oil and gas companies did well thanks to higher oil prices. Brent crude pushed through the $120 a barrel mark. The best performer was Whitehaven Coal, up 6.4%. Zipco was the worst performer, down another 5% yesterday. It's nearly 90% below its high point. Investors just don't believe the buy now, pay later group has the size to match it with the big players in the sector. Now, moving on to global financial markets, the US yield curve, Michael, has inverted.
Hang on, hang on. I'm going to get a little siren, a little alarm that goes off whenever you kind of slip into jargon. The US yield curve has inverted.
Okay, let's have a little lesson on bond markets. The yield curve measures yields, what you get back on bonds. So you buy a bond, a 30-day IOU, you get something back. 1 year, 3 years, 10 years. Those IOUs, which is exactly what a bond is. What we've seen in recent years, and particularly recent months, is expectations that economies will strengthen. So out into the future, interest rates will rise. So people expect interest rates to be higher in 5 years. Therefore, longer-term interest rates are higher and there's a slope of that yield curve. Now there are concerns that the US Federal Reserve won't be able to contain inflation and that will lead to a recession. So people are thinking about rates. They'll rise in the next couple of years to try and contain inflation. After that, the Fed will be forced to cut rates so as to help economic activity. The shape of that yield curve, rather than rising in a straight line as you might think, it suddenly turns down at the end or inverts. So long-term yields are lower than short-term yields. Let me try and explain that in one sentence. The yield curve suggests that the US could go into recession in 5, 6, 7, 8 years' time.
That actually summarizes it perfectly. And it's just extraordinary that this is, I find it quite remarkable that it's factoring in movements that are 3, 4, 5, 6, 7, 8 years away and trying to accurately predict what is fairly significant movements such a long way away.
Without pressuring the point, bond markets are really good at predicting the future because it's real money. As we've talked about before, our super money goes into bonds, so it is real money. So bond markets are really good at predicting what's going to happen. Now, just before we leave markets, I want to mention the Aussie dollar. Yesterday, it rose to a 4-month high, touching 75 US cents as commodity prices, notably iron ore, edged higher, doing very well, the local unit.
Yeah, it certainly is. All right, plenty to get us started there, Sean. We'll be back in a moment with the rest of the day's business news. Sean, we've talked about companies conducting buybacks of shares previously. Now, National Australia Bank has said it will buy back $2.5 billion worth of its shares, having just completed an earlier $2.5 billion buyback.
Yes, the banks are flush with cash at the moment. Now, a buyback is when a company goes to its shareholders and offers to repurchase their shares. Those shares are then cancelled. So the number of shares on issue declines and theoretically the value of each remaining share on issue rises. Companies use buybacks when they figure it's the best way to use excess cash. The alternative is to invest the money, maybe buying another company or do something with their own operations. National Australia Bank, like all the banks, have plenty of cash. It means that's $5 billion in buybacks for the Melbourne-based bank this year. Not bad. That's alongside a $2 billion buyback from Commonwealth Bank that's about to close. NAB's shares are up 23% over the past year, and at least theoretically, buybacks will help even more.
Sean, while we're talking about banks, ANZ is the first Australian bank to mint a stablecoin in Aussie dollars. I think probably the best and most logical place to start with this is a definition of what a stablecoin actually is.
Yes, very good idea. A stablecoin is a cryptocurrency that tries to peg its value to some external reference point. So in this case, ANZ is launching a crypto which it's pegging to the value of the Australian dollar. According to the Financial Review, it's the first time an Australian bank has created a digital asset linked to the value of the Aussie dollar, and it was done for a client, Victor Morgan Group. Essentially, it allows transactions to be settled in real time. The benefit to the client is it's not waiting for days for settlement to occur, in which lots of things can happen, including price changes and things like that. Remember earlier in the week, Michael, the federal government said it was looking at new laws to help Australia become a leading jurisdiction for digital assets. ANZ is definitely leading the way, locally at least, in terms of using cryptos for big businesses. It's quite a development.
Yeah, it certainly is. All right, now I mentioned this one at the top of the show, Sean, and you're actually speaking to John Stensholt from The Australian today because it is Rich List time, well, at least the version that comes from The Australian. Gina Rinehart comes in at number one, worth a casual $32.6 billion.
Yeah, another day, another dollar, that sort of thing. Number two is another iron ore magnate, Andrew Forrest, who's worth $31.8 billion. Cardboard King Anthony Pratt is at 3, and the founders of Atlassian, Mike Cannon-Brookes and Scott Farquhar, come in at 4 and 5. Now, some of the more interesting names at the top of the list. United Australia's Clive Palmer is number 7, worth $18.4 billion. That's twice as much as last year. Incredible. And the Canva couple, Cliff Obrecht and Melanie Perkins, are at equal 8th, each worth just under $16 billion. Michael, a few fast facts. The average wealth of the top 250 is more than $2 billion now. There are 30 women on the list, up from 27 last year. There are more property moguls on the list than any other sector, followed by technology, investment, retail and mining. And certainly the new money is with the technology barons.
Yeah, certainly seems that way. And I just love some of the stories in there, particularly some of the retailers as well, like Culture Kings.
Sombrero.
Yeah, exactly. So, and these are, I mean, they're all covered in your chat today with John. So it's definitely worth sticking around for that. But moving on, Sean, and away from the rich list, the COVID numbers continue to climb. But there was news on a 4th dose of COVID vaccine.
Yes, well, the news is that there will be news in the next 24 hours, so said Health Minister Greg Hunt. That's quite a way to announce news that's not actually happening. The rollout of 4th doses, of course, has already begun to vulnerable people. It will probably be stretched, and we'll hear more about that in the next couple of days. In terms of cases, there were more than 2,000 infections in Tasmania yesterday and nearly 1,300 in the ACT. There were 25,000 infections in New South Wales, 11,000 cases in Queensland, and more than 10,000 in Victoria. Also yesterday, the federal government announced an mRNA vaccine manufacturing facility will be built in Victoria to produce vaccines from 2024. The deal with pharmaceutical group Moderna is worth billions of dollars, the government said. Not exactly how much, but billions of dollars, and could produce up to 100 million doses a year.
Sean, not good news if you are building a house or doing a reno. Inflation pressures are now starting to push through to the building sector.
Pardon the pun, this is very close to home for me because we're about to renovate. This is a story I don't like. Brickworks, which is a big building materials company, said it's lifted the price of bricks, roofing tiles and masonry as a result of higher raw material and transport costs. Managing Director Lindsay Partridge said construction times for home builders and renovators are also blowing out. They had blown out, they're blowing out even more. He was speaking after delivering Brickworks' largest ever after-tax half-year profit, which triggered a more than 5% jump in its share price yesterday.
And Sean, one of my favourite shops, I know we talk about your favourites a lot, Kathmandu and the like. One of my favourites is JB Hi-Fi, and they've had a strong quarterly result.
Yes, its Australian operations have experienced total sales growth of 11% so far this year. Pretty good. New Zealand operations are up almost 3%. JB Hi-Fi's share price jumped 4% yesterday as a result.
And just shifting to politics quickly, Sean, a familiar face, high-profile independent politician Nick Xenophon is running for the Senate in the next federal election.
Yes, he quit in 2017 for a run at state politics, which came to naught. 2 of the original Nick Xenophon team are still South Australian senators in Canberra, Rex Patrick and Sterling Griff. Neither was likely, well, Sterling Griff was certainly not going to be returned at the next election. Rex Patrick probably won't now, since Nick Xenophon will obviously head that ticket.
All right, moving on to overseas news. In a move that is surely to be watched closely in Canberra ahead of next week's budget, the British government, Sean, has cut petrol tax to help offset the cost of living crisis as inflation hits a 30-year high.
At a cost of £5 billion British pounds, the fuel duty will be cut by 5 pence a litre. Now, locally, Australians pay an excise on petrol of 44 cents a litre. Any relief, of course, will be welcome. Generally, governments don't like cutting excise or taxes on petrol because they raise a lot of money and they're really hard to put back on. Anyway, the Brits have done it. We'll see what Australia does.
All right. Now, Russia, Sean, has upped its nuclear rhetoric with a top diplomat warning that Russia is a nuclear power and will consider using such weapons if it sees a credible threat.
Yes, the comments came ahead of a major NATO summit over what the US has now formally labelled Russian war crimes. US President Joe Biden has arrived in Brussels for the NATO summit, as well as G7 and European Union summits. On the ground, the bombardment of Mariupol continues, with reports of about 100,000 people in the southern city remaining trapped without water, food or power. Capital Kyiv is also under heavy fire.
Sean, there's plenty of other stories around this morning as well. Let's run through a couple of them quickly. WikiLeaks founder Julian Assange and his fiancée Stella Morris married at the high security prison he inhabits in London.
Yes, congratulations to them. She looked beautiful in her wedding dress, which would have looked quite odd in the prison, I'm sure. Madeleine Albright, the former US Secretary of State during the Clinton administration, has died. She was a top US diplomat immediately after the Cold War and was instrumental in renegotiating the US relationship with Russia and NATO. Also, Michael, crash investigators have made a major breakthrough at the site of the China Eastern jet disaster, which occurred on Monday. They've found the black box recorder. And the Prime Minister of Jamaica has told Prince William, second in line to the British throne, that the Caribbean nation wants to become independent and remove the Queen as head of state to address, quote, unresolved issues, end quote. Basically, that's all about Britain's role in slavery previously. That controversy has really mired that particular royal visit.
All right, now we mentioned this a few times now, Sean. Up next, the Fear and Greed Daily interview, and today you're speaking to John Stensholt from The Australian.
Not only do we go through the list, we get lots of stories about how he met the people, including Clive Palmer, a great one about meeting on his super yacht, also about whether people like being on the list and whether they like falling off the list and how they react to that. Great chat with John.
Yeah, it's a ripper. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Friday, the 25th of March, 2022. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.